India's central bank has issued a 26-point plan for ethical AI in finance. Called Free AI, it pushes for sandboxes, local AI models, and UPI links. To know more about this, we are joined by Teresa Roberts from SAS and Fergal de Burca from KPMG Singapore. Teresa, let's begin with its impact. How could this framework shape the future use of AI in finance?
AI governance framework must develop alongside a bank's plans and priorities for AI as it enables innovation. By embedding AI oversight, AI becomes trustworthy and banks can innovate faster. One of the most critical challenges of our time is balancing autonomy and trust. Banks need guidelines and guardrails to innovate, and a good analogy is to think of it as flags on the beach that shows you where to swim. SAS has long emphasized that trustworthy AI requires not just the technical models, but clear oversight, transparency, and accountability of the AI systems, and governance controls that are embedded throughout the AI lifecycle. By setting standards for governance, assurance, and protection, the framework ensures that AI systems in banking are not only innovative, but also explainable, that they are auditable, and that they are fair, and that builds customer trust.
Well, I wouldn't really want to predict the future use of AI in finance, as it's seen a lot of change, even in the last 6 months. However, the principles and values behind free AI go a long way to help with the shape of innovation and the approach to AI adoption. So if we look at the focus on accountability and putting human first, we're seeing a prioritization of AI for social impact. So that could be tackling fraud, it could be helping banking for the underserved. And also the recommendation of an innovation prize for AI usage that really drives positive change is refreshing when AI is often viewed as a threat by the general public.
But in order to do this, what kind of infrastructure will be needed to support its rollout?
Yes, that's right. Banks require agile frameworks that are flexible enough to be federated. Supporting this type of framework requires both technological and organizational infrastructure. On the organizational side, banks will need to uplift their capacity to govern AI systems by extending their corporate governance frameworks, providing board-level oversight, and also upskilling programs so employees understand how to manage AI responsibly. On the technological side, secure data environments, robust data governance, and model lifecycle management become essential. And SAS highlights the importance of model registries, explainability toolkits, and fairness testing, as well as continuous automated monitoring to ensure compliance and transparency.
Yeah, the report recommends innovation and has come up with some very innovative ways of supporting AI adoption in the industry. The recommendation about a data utility is really quite a useful enabler, given that it will provide large-scale financial services data that will support potentially smaller scale operators in testing and training models. In addition to that, then you have a sandbox, which will ensure consistency and appropriate testing is applied. And then the idea of a financial services LLM as a public good is also a very useful asset that will ensure consistency in implementation.
And just like any other form of tech, there are still concerns surrounding the use of AI. With that, what safeguards are suggested to manage the risks of AI in finance?
Yes, thank you. Key safeguards align very closely with what SAS recommends for trustworthy AI. Bias and fairness checks ensure equitable treatment across different demographics. Bias is, of course, a major concern when it comes to AI. Even in generative AI, nurse to woman is closer, as well as doctor to man in the word embeddings. What is exciting is that we can assess for bias and also address for it. Explainability and transparency is also important so customers and regulators can understand the way AI is making decisions. And then you, of course, need human oversight and accountability with clear roles and escalation processes, as well as data privacy and security controls, including anonymization of personal data and the use of synthetic data where that is appropriate. Lastly, continuous monitoring and assurance is important through drift detection, audit trials, as well as independent validation. AI risks are not insurmountable and they can be addressed, but organizations will need to invest and uplift their capacity to govern these systems.
I'd like to start by it's not really a safeguard, but one of the facets of the report that was quite useful was the transparency around AI adoption in financial services. So it called out specific use cases where banks have achieved value, and also the fact that a lot of the AI that's been implemented is actually quite simplistic. We're not looking at complicated models. I think that helps to drive out a pragmatic approach within financial services and really set a common understanding of where banks are getting value. Now, if we turn to the approach around safeguards within the Free AI report, what's also quite interesting is that it is looking to enable AI controls on top of existing operational governance. So these are things like the business continuity planning, new product approval, the red team testing. So these are well understood processes within the banks that they can extend rather than create really separate governance around AI.
Thank you so much for sharing your insights and for joining us today, Teresa and Fergal.
Thank you so much for having me.
Thank you.
Once again, those were Teresa Roberts, Global Solution Lead Risk Modeling and Decisioning at SAS, and Fergal de Burca, Head of Financial Services Technology for KPMG Singapore. For more news, visit asianbankingandfinance.net.